Apartments are temporarily oversupplied, office approaching peak of vacancy, and retails remain flat. Commercial real estate has attracted considerable attention as recent banking events spiked prudent examinations over banks' assets and liabilities. According to the latest FDIC call report, 160 banks held almost 1.2 trillion, or two-thirds of the commercial mortgage debt, while 4,500 institutions collectively held the rest of the loans collateralized by income-producing properties. Although this seems to suggest less imminent risk to the commercial real estate space, even with churn-ups in smaller regional banks, doom loops of many central business districts and challenges associated with refinancing maturing CRE loans serve as the headwinds of the industry's near-term performance. The tide has been gradually shifting for the multifamily sector. Pandemic fever, once fueled by discounted rental price and migration, is gradually subdued as rent burden grew while economic growth and household formation slowed. Multifamily demand has softened notably over the past few quarters, with net absorption even teasing slightly below zero in the first quarter of 23. But because net move-outs based on preliminary trend were so small, we would not be surprised if the sign flips when more construction data gets verified and backfilled in the next 2 weeks. Overall, we remain cautiously optimistic for multifamily demand, given a few interplaying factors, including the cooling of the single-family housing market, resilient labor market, and positive real income growth. While leasing was weak, construction activities were at record high. Projects started in 21 and early 22 when rent growth was high, the cost of borrowing was low, expected to complete this year and next. First quarter delivery was sluggish and elevated borrowing costs, and a slight uptick of supply chain stress delayed construction timelines. Vacancy ticked up 13 basis points to end the quarter one at 4.71%. Which is over the vacancy level during the pandemic of 4.68%. Compared to year-end 22, rent declines became more widespread in the first quarter, with 60 primary metros recording negative market rent growth from -1 to -6.4% at the national level. Asking effective rents declined by about 1% respectively, with most renters left over to handle the burden. On a year-over-year basis, both asking and effective rent growth slowed from 17% in Q2 2022 to just around 6% this last quarter. Now, if you're in need of an experienced commercial real estate broker, I can be reached at 281-222-0433. I appreciate your time and have a good day.